because most of the lenders are not data driven.
I can't fight it. Just like the colors on the inside of my eyelids.
Exists a single platform for anyone who wants to get into the digital lending space, where you get everything from onboarding, scoring, alternative data, collections, and loan management. CBK in the Dr. Njoroge era used to say that they are the original sandbox because, how did M-Pesa get through and all these other things? But as you know, it's very difficult to experiment with payments and with lending if you don't have a license today. So I think that's the first thing. I think the second thing is that the market must be ready. It would have been very difficult, for example, to launch a digital fast lending product on a non-smartphone device, so that, because how do you do the KYC? Even if you wanted to do the KYC, it would have been impossible to do the KYC. And then I think the third layer is just that systemic infrastructure like the Credit Reference Bureau. In lending particularly, you've got willingness, ability, and KYC fraud, etc. And so if you're not able to do those three checks in a centralized hub, like a Credit Reference Bureau, then you have you really can't innovate on how to onboard and how to make that access to credit easier. I hope
Yeah, thank you so much for the Kenneth. Would you like to give us your 2 cents on that?
Yes, so I think one of the most understated parts of all the systems we're using is how data is applied and the integrity with which it's applied into the infrastructure. So one of the things I've spent an extended amount of time doing is finding how to get reliable and high integrity data feeding into these engines. So it's one thing for us to have a good set of integrations. It's another thing for us to be able to rely on that data to make the right business decisions and to also be able to then generate the right types of analytics. Why I say analytics is so important is because I've found that more than 60-70% of the time, the insights that you get from the data and from the analytics platforms you use tend to be the complete opposite of what we consider our gut instincts. And so it helps you to formulate the idea that it's good to rely on the analytics because it changes your way of thinking without necessarily having you do a whole new set of reports or something. You get the most interesting inferences from the right or correctly mapped data.
So what I'm hearing you say is that don't go with your opinion, get the facts.
Yes.
Yeah.
Everyone has an opinion.
Yeah. Now, Kris, I'd like to come back to you. But Kris the other day had a very wonderful presentation. I think with Nairobi Street Kitchen. I think we were attending an event there with another organization, and I love the way he brought the idea home that anyone who had a strategy before we discovered something called the Strait of Hormuz learned very quickly that a strategy, when it meets reality, can be changing overnight. But maybe from that point of view as well, Kris, I think I really love that presentation you gave. What are your thoughts around the same question?
Yeah, so we all have a gut feel. And sometimes when you've been in a particular market for a long time, certain things become like top of head. But it's very good these days that you can always double check that gut feel, or rather juxtapose it or triangulate that information on the reality. I think definitely when it comes to lending, that approach of it can't work. It just can't work. Long-term sustainable businesses are not built on gut feel. They're built on raw data, or rather extrapolated data into information, and more importantly, trends. And I think what we've heard here today and what he's referring to is really about, are we able to, over time, be able to have predictable systems which give us predictable information in a way that we're able to make data-driven, insight-led decisions. Ultimately, we are always making decisions. Every minute, every second, you're making a decision about a loan amount, a loan tenure, an interest rate, or the probability of somebody defaulting. In fact, I think everybody over here, when you go to bed, the question is, how many of the loans have I issued? What's the probability of them defaulting? And so that's why being data-led is more important. Yeah. Excellent.
Kevin, I'd like to come to you. Sorry, I'm calling Victor. What am I saying? Kevin, sorry, Victor. So particularly from the scoring perspective, what would you say to this?
Maybe before even I talk about scoring, on the same question about the bottlenecks that I see in the lending sector, one, I think majority of the lenders are still operating in silos. I'm really impressed with what I've seen today in Presta, how you really need to have a unified platform, from loan origination to credit scoring to disbursement to collection and that entire process. So you find that even the majority of the lenders today, even the banks, still do a lot of manual processes, or you find that these systems are not integrated at all. So there's no workflow that is automating that entire process. Now, coming to the element of scoring, very few companies in Africa today are really data-driven when it comes to loan decisioning. You find, I was having a conversation with someone recently, and he was telling me, why is it that the mortgages in Kenya today, I don't know who can guess how many mortgages we have in Kenya today? 30,000, actually, yeah, 30,000. If you go to a country like US, they are about 40% of households are actually having a mortgage. If you prorate that, you realize it's over 100 million households are having a mortgage. Why is that the case, that we have very few mortgages in Africa? And yet we pride ourselves as being very high financial inclusion rates and things like that. It's because if we were really using data properly, we should be able to lend more. There's actually room to lend more. There are people who can afford mortgages today, but they cannot access that facility because most of the lenders are not data-driven. They would check your payslip. Of course, yes, affordability is a key ingredient in there, but there are many other things that you can check to actually confirm that I can qualify and I'm willing to repay the loan.
Yeah, that's a shocking number. You said 30,000? The entire nation of Kenya? Yes. Across all the banks? Yes. Including housing finance, who are now called something else? Wow. Winnie, let's come back to you. What are the most common identity and onboarding risks you see in lending workflows, and what should lenders do first if they want to reduce fraud while keeping the process fast?
I think we're in the age of deep fakes, stolen IDs, fake documents. We find a lot of fake documents when doing KYE. So there's a lot of that. So we do have tools for that. So the best way is to build enough data on the individual so that you know, how much do I know Victor? How much do I know Moses? Then two, you have a risk-based way to know this person needs an extra trigger to do AML, and make it easy for the onboarding customer not to see the security checks, but for fraudsters not to come in. So it's balancing the two, and AI helps in that.
Fantastic. Kevin, coming back to you, from a lender's perspective, where do you see the biggest friction today in loan origination, and what is the most important part of the borrower journey that still needs to be simplified?
I look at lending from a very macro perspective from where I sit. So when you talk about friction, for me, the thing I hear the most from my members is actually new customer acquisition. So I am a large lender, I do digital, I have an app, ETC. I've been in existence for 10 years. I have my million customers, but I'm really struggling to get my millionth and millionth and two, like that. And the reason is that because, and I like what my friend Mr. Kiplaagat said, because the data is so disjointed and sitting in silos, there are customers that would need some of the services we offer, but we can't see them. right? And the reason we can't see them is for many reasons. So one of the things we've done in the association is we have something called the Valley Data Tool, where we're trying to get every lender, banks, SACCOs, MFIs, MFBs, DCPs, to send the positive and negative credit data on customers to one place and then disseminate that into the credit bureaus. Because we can't see the customers, we're not able to acquire. There's another challenge actually that's also come about because of that inability to see the client, potential clients. The other side of not being able to see you is then over-indebtedness. So you have clients that are taking, say we have 227 lenders and they have loans with 225. Right? But when you actually look at the viability of them being able to borrow, they shouldn't have been given a loan by the 224. Right? It should only have been given the one, because everyone assessed that client for 50,000, right? Because you can see they can afford 50,000. Then suddenly everyone else gives them 50,000. So now everyone has this exposure to a client who cannot repay. So from my lens, I know that's a very macro sort of ends. When now we come to the actual product, one of the big frictions is, the kind of data we have access to on the Google platforms, right? I remember when we launched our digital lending platform in 2016, we could get M-Pesa data from passing SMSs and financial data from passing SMSs. Today, many of us struggle to get that permission. So what we have had to do is essentially take the customer through journeys where they have to upload actual statements, which is an unnecessary friction. When we now go to the telcos and say, hey, why don't we streamline this so that we can aggregate this financial data directly from you, their instinct is to charge us something, which if you really think about it, in the long run is not even good for them. Right, so when I look at it from that product perspective, it's how do we solve that ability to aggregate alternative data, and that's why I really admire what Spin Mobile is doing. They're actual pioneers in the market because they are solving these problems from the market perspective without the support you'd expect, say, from the regulatory or government side. So those are the two perspectives I'd say I'd offer.
Well, thank you so much for sharing that, Kevin. Kenneth, I'd like to come back to you. Many lenders still struggle with legacy processes and disconnected systems, which is, I think, what Kevin has already pointed out. What is the most practical way to start digitizing the lending journey without overwhelming the organization?
Interesting question. I think a good African saying is the only way to eat an elephant is piece by piece. So when you look at what are some of the key struggles that organizations face, it's when you have a very big system. I think me and Tom have had this problem together. You have so many solutions and the customer has only the bandwidth to absorb maybe 2 out of 60 for the moment, but still needs all 60. And there's a tendency, especially when the IT guy gets involved, to buy all the systems at once. And when the people get involved in actually using the systems and the change management is too hard, it really slows down how the systems function. We've had the benefit of working in about 46 African countries. And every time we're deploying systems, every time we're upgrading systems, every time we're interacting with people who want to improve what they're doing, enter AI into the equation and other complexities, there's always the human element, the change management, and how we can moderate that for the people. So I think the better approach is to have sort of like a waterfall methodology, find the people who are your key champions, start step by step, start to foment the change, always ensure that you have the benefits coming out on the front end. And over time, people start to see the value and start to change slowly. I think everybody here has been part of a fantastic IT project in their company that failed spectacularly, even when the technology was good. So it's really the people in the room, the people are the drivers of the innovation. They are the drivers of the change. They are the drivers of the solution. So without integrating and incorporating people, we really can't cross the divide of successful systems.
So people is the most important operating layer.
100%.
Fantastic. Kris, I'd like to come back to you. From a business strategy point of view, what's a clear sign that a lending institution is still operating with outdated processes instead of a future-ready model?
Well, I think today we were given a very good example of when Irana was manual, if I can say that, and when they became digitized. So I think the first thing is speed. I think in this day and age, nobody wants to wait 72 hours to get a loan approved. Let's talk about approval first. And then second, because of where most of us have come from, there's the issue of the speed to disburse. So I think the first thing is you need to look at speed. Speed is important, the approval, so at least I'm going to get it, and then the disbursement. So when you see people are taking 48 hours to approve and another 72 hours to disburse, there's a problem. Okay, 72 hours to disburse may just mean they have too much business, they don't have cash. Let's assume. But most often than not, there's a problem, the basis. The second is when you have manual interventions. If there's paperwork, you're not digital. I think one of the challenges we have in this industry is the license category is DCP, and a lot of people in the category don't understand that the D in the DCP is digital. So genuinely speaking, if you have a DCP license, you should have a digital platform. In fact, one of the things that CBK should be doing is before even accepting the documents, they should have a team of people who are monitoring or rather evaluating the platforms. The third would be, the risks, the risk side of things. Are the operations teams not sleeping because they cannot figure out? They haven't plugged on to Spin Mobile so that everything has been assessed and they know the risk involved in giving the loan to that particular individual. So it's around that. If somebody is not digital, if the speed is not there, if the systems are manual, if you are being told about this department and this department hasn't signed what, it's all disjointed. Ultimately, the customer just wants a journey. I think like we've been shown on the WhatsApp, the inquiry to the information coming in, the onboarding and everything on one platform. Most often than not, you should be able to do it on a mobile first. Yeah.
Fantastic. I like to call it simply, don't give a human a robot's job. Yeah. Yes. At the end of the day, automation allows us to make things move smoother, simpler, better. Victor, I'd like to come back to you. When traditional credit lines are incomplete, what role can alternative data realistically play in improving lending decisions, and what data signals matter the most in your view?
Well, that's a very important point. Yes, most lenders, and traditionally we've always relied on conventional, traditional scoring, where we use the CRBs. Like, we just want to see who's been listed, how much loans you've taken before, and things like that. But as we get into this realm of alternative data, you actually realize that it would work better when we have a combination of both the conventional, the traditional, plus the alternative data. And that is the direction that we've also taken as Spin Mobile, because today we've partnered with Metropole CRB to come up with a combo score, which has the Metropole data plus the alternative data. Now, let me just break a bit on the alternative data. When we talk about alternative data, we are talking about other data sources that could help predict ability of a customer to repay a loan and the affordability of the customer. These could include SMS data, the financial transactions, either in mobile money, in the banks, the location data, social media, and all these coming together to help us point out some of the key prediction elements that can tell us who is a good borrower and who is not a good borrower. I want to just zero into just a few of them that I've seen at Spin Mobile. Data sets like M-Pesa data is very good data for prediction. For those who've seen our system, they've seen the demo of the platform, you realize that you can tell a lot about someone by just looking at their M-Pesa transactions. We were running our model recently, and we realized that, did you know that something like somebody who is paying tithe and offering, when we checked in our model, so we check your M-Pesa statement, if you have tithe and offering, the model was actually giving us 97% repayments. So
are you saying your ability to tithe determines the ability to...
The willingness to repay the loan and the financial prudency. Yeah. Another very funny statistic. Anybody who had over 7 different loans, in this country we have a problem of loan stacking. You find somebody having 20, 30 mobile apps on the phone, and they can be able to juggle all this together. We realize that anybody having over 7 mobile apps, over 7 different loans, because you're able to track, you received this X amount from this mobile lender, and immediately after that, you repaid this Y, borrowed immediately to borrow A, and all that. It's loan stacking, yeah? If that person crosses the number 7, their ability to repay reduces by 93%. Wow. It's very dangerous because it only takes one of them to default and all of you will default. Another statistic you were checking, if you are betting over 10% of your income, yeah, and we have people who do that a lot in this country, and it happens that you had borrowed to bet. If you don't win that bet, you cannot repay the loan. Unasema hiyo bet imeungua. So imeungua na the money that you are using. Things like if your medical expenses, if you're crossing over 30% of your income going into medical expenses, either hospital bills and things like that, you realize that you have to take care of your basic needs first. So you can't prioritize loan repayment over your basic needs. So it is critical that we check this alternative data because these parameters help us predict who is a good borrower and who is a bad borrower. Whenever we extract data from a statement, a mobile money statement or a bank statement, we get over 4,000 measurable parameters. And with AI today, it has helped us to zero down on what are the key parameters that then would predict the ability of this customer to repay the loan. So we calculate your affordability and also your willingness to repay. But that is working still in progress, but there's a lot that has been done around that sector. Yeah.
Victor, I have to ask, have you documented this somewhere for us to download or see?
Yes, it's, I didn't have time to do a demo today, but if you want me to do a demo, we can have that conversation. I can give my number.
And then we can distribute it to the churches, right? Okay, awesome.
Thank you.
So at this point in time, again, I can see Sally is giving me the look from a distance here. So I'd like to open this out to the audience. Hopefully a mic is available to come out to you. And if you'd like to ask any of the panelists a question, please do so. Please keep it concise. We still want to get out of here by 12:30. And if there is a roaming mic available, please raise your hand. It'll be brought to you. Guys, there's a wealth of knowledge in this panel. Please do not miss the opportunity to ask the right question.
Sorry, Moses, I was just commenting.
Yeah.
That the stats we've been given say the church and the mosques should pray on more people so that they become faithful in their tithing, because that way they'll become better payers.
That data point is important, huh?
Just a fun one. It was just crossed my mind. It occurs to me that people who bet 10% of the 10% or more of their income on every month. So entrepreneurship should be in that category.
Okay, does anyone have a question, or do I just jump into the next round and then we'll wrap it up? No questions? Okay, I see a hand there. Is there a microphone available?
Thank you very much, panelists, and it's a powerful one, you know. My name is Joseph Mugera from Sanking or Green Light Planet. We sell solar products and phones on credit. So we compete with M-Copper. I think most of you know M-Copper. So our customers are those guys down in maybe the lowest pyramid who need solar. So our another competitor is kerosene. So if we find you using kerosene, we're usually very excited because you're our key customer to move you from kerosene to a solar clean energy product. So my question is, we have a challenge with the way we do the scoring for these customers. They have a feature phone, you don't have a smartphone, so you cannot use any data from their phone. M-Pesa, once in a while to buy credit of 10 bob, 20 shillings. Which other data can we use to score those customers? Thank you very much.
This almost sounds like a Victor question, perhaps.
Okay, yeah, that's something we have observed, and we were working with a BNPL customer that does solar like you guys, and we realized that data because they were mostly lending in Kajiado, and most people, their statements are so scanty, but just using that M-Pesa statement, which is so scanty, we realized that there was one specific parameter that was still very predictive of their willingness to actually pay daily basis for that solar product. So the data, yes, is very minimal because you can check the CRBs, they have not registered there, so it's zero. But it's all about just using what is there. And I understand your worry about the data is so scanty. So I think where the partners like us come in is on the M-Pesa data, because I think all of them have a mobile phone, and probably they have received money in the year, they have sent out the money, and they have done one or two things. But I also think there are other things you can check, like now what my colleague here in Identify Africa, I've gotten it right, they do in these aspects of verifications of KYC. That can also help in that particular field. In my research, my PhD research in 2022, and this was also born out of what we had seen at Speed Mobile, I realized I was doing my research was on digital credit revolution, and just trying to answer that question of how can we help our people, yes, to access these products, but in a manner that they don't get over-indebted and things like that. There are two things that came out very strongly. Number one is the purpose for the loan. The purpose for the loan was a very big driver on the repayment for the loan. And that is why embedded finance is doing very well, and BNPL players like yourself are doing well. So it basically means that if you lend to this person the first time and they're able to repay on daily basis, you can be able to trust them with bigger loans because they have a purpose. They are paying because there's a specific, you didn't give them money, you gave them a solar product. So it had better repayments compared to people who are actually lending money. And that I think should also go to all of us in the room. Let's move towards embedded finance. If you're dealing with farmers, instead of giving them money, give them inputs. It shows that there is higher repayments when you actually do that, because one of the key drivers for repayments is purpose. The other bit is convenience. Those were the two very strong parameters. Somebody would forego a cheaper loan at 5%, and they would go for one which is 10%, so long as they can be able to get it immediately. Okay? So speed and convenience became a much more bigger driver compared to the price for the loan. And the price really didn't matter in that in the findings that I saw. So you are in the right field. I think you should not give up, even when there is no data. Just keep trying. Probably start with lower exposure and then increase over time and use that data that you're generating.
Okay, we're doing very well. Yes, actually, I was going to ask if any of the other panelists wanted to answer. So we'll take this to Kevin.
Because we're sitting with technology providers, I think one of the insights I can share is that the largest lender in this market is actually the shopkeeper. And that's a data set we have been unable to figure out how to capture. So what I'm putting back into the audience is, if there's somebody who can figure out how to ensure that we can, figure out how we can capture that shopkeeper data. Your problem statement because you're technically talking about what we call in the business a thin file, right? And thin file, what you really try to do is you're trying to figure out, okay, where do I capture the transactions of this customer? And the one place that we're certain of is the shopkeeper. I was in Homa Bay the other day, and I learned something quite unique. I didn't realize that there are still, and don't blame me because I'm a Nairobi guy. I didn't realize that there are still towns where the teacher's salary is the main or the largest income into that economy. And so if that teacher's salary does not come in on time, everyone down the chain, right, struggles. The bar, the shopkeeper, the supermarket, and the church, right? But that means there's a data set there then, right? Because it means that if I'm able to capture that shopkeeper transaction somehow, I can quickly learn from the shopkeeper's what I call instinctual credit appraisal system, right? The one in the brain that they don't know. They know Mama Nani pays on time and Baba Nani pays on time, but the brother of Mama Nani never pays on time. So when brother of so-and-so comes, I tell Mama Nani as well, right? How do we figure that out? I don't have an answer, but I thought the question is such a good question. It would be a disservice not to give you that statistic of the largest lender in this market is actually the shopkeeper.
I think we have another gentleman at the top. Somebody will take that as well.
I wanted to ask Victor a question. And I think you mentioned churches, but we're in Nairobi. So does someone having a regular local bar they go every day, is it a predictor for someone will pay? Because it's behavioral. I show up at this local every single day. And I buy 2-3 beers and I come back again and it's regular, because tithe is once a month, but a local is
Actually, she's addressed something that I would have forgotten to mention here, and it's very important. There is a lender actually did logbook loan. So somebody came with a car, they were given the loan. I think they said they installed 3 trackers into that car. And this person was able to remove the trackers, change the color of the car, and probably even use a stolen number plate, okay? But in the M-Pesa data that we had actually checked over 1 year, we had realized that there is a joint they frequent every Friday without fail. So we picked that and we actually mentioned to them that this is something that you can actually use for your skip tracing and for your collection. And true to it, I can give you the contact of this company. They are not here today. They were able to get back their car based on that data point. So it might not be relevant for affordability or willingness to pay. You are right. But on other aspects like skip tracing, collection, you can get a lot of data there. When it comes to alternative data, there's the aspects of, I mentioned about willingness, ability to repay and all that, but there are other silent items like product development. We see in your statement that you're actually paying school fees to a particular school or to Strathmore, and remember tying that to the purpose that I mentioned. You can actually come up with a product of school fees loan and you already have your client there based on the data that they shared with you. So you can be able to develop new products. You can be able to know where else to expand, where to create branches, where do most of your customers operate, because we have location data in these financial transactions. Yeah.
I think there's a gentleman there with one question. Maybe we can give him a chance to ask.
Okay, my name is Harrison from BD Credit. Maybe partially, I think my question has been answered, but possibly I'll talk about the measure of biasness with the scoring. Then the other question is very important because I think we are affected by this, and we are mostly competitors in terms of how much we can make, but not competitors on how much we can lose through fraudsters. So how are we doing about that when it comes to managing that? Because fraudsters normally don't target one. They have a coordinated way of targeting 2 or 3. So how are we doing about that? And possibly the other one is about sustainability of the market, considering that recently, since 2018, when I think the former CBK guy was against the microfinance, talk about the regulators, multiple regulations that has come. I don't know DFSAK, how they are doing about it, because you don't understand. We have Competition Authority of Kenya, we have data protection, we have now the CBK. What is the association doing about that so that we can have a harmonized way? Thanks to the AI, because I think technology is really helping us to overcome maybe becoming branchless, that we are not suffering from even county government and the rest. You can imagine all those regulations. So, association, thank you.
Thank you. Would you like to take the first question? Kevin? First question on the DFSAK question. Yeah, I'll talk about the fraud from a DFSAK perspective, and I'm sure they have solutions. So, fraud is a big issue. Joanne will tell you, even in fact, that story of the car being ours, was somebody even cut it up and left us the tracker somewhere in Nakuru. So that's what we were chasing. Kumbe, the car had been chopped up. Anyway, fraud is a big issue, and on the M-Pesa platform, especially in the early days, we actually saw quite a few challenges. What we did then is that we wrote to M-Pesa and we actually built a solution. So whatever you're using today to, let me not go too technical, but some of the technical integrations that you do around security were DFSAK led in 2018. They've improved over time, but they're DFSAK led. Since then, and I just like to remind, we are a member-led organization. So the next fraudster issue we dealt with was actually around borders. So our border lenders, Mogo, Watu, M-Kopa is electric, but these other two are ICE, was seeing an increase of bikes being stolen from their ecosystem and then being transferred very quickly to Ethiopia. And there was even one case where we saw it in real time, within 9 hours, the bike had crossed over the border. And it was stolen just in Umoja 2, right? So what we did there is we partnered with National Service, our tracking system. So each individual company has their own tracking system. And then we actually hired a team that works with the police to chase these bikes, right? Because what we realized very quickly is once you made the report to the police, and by the time the police started moving, the bike was already in Nakuru. Right? And we needed to catch the bike before it leaves Nairobi, right? For example, that service is doing very well. And if there's any additional issue, what I always tell members is come right to the association, let's now figure out who else has this problem, and we find the resources. Because the other thing that even Kris and Bernard would tell you is that there are these little pockets of resources sitting in the NGO, World Bank, FSD ecosystem that can also complement some of the money that the members have. And that's how we build these solutions. On the regulatory side, I'll scare you a little bit more. We have a data governance law coming, right? So to your point, why do we keep getting all these different regulatory frameworks? I'll give you 2 answers. So the first is the industry is now lending 133 billion shillings. So when we were being called fleas by Dr. Njoroge in 2018, there was no real understanding of the impact the industry had on the MSME and the SME specifically, because what they had seen, when they look at the lending numbers, they see the billions of shillings moving out of the banks, but what they didn't realize is that even though our tickets, our gross number was smaller, our impact was higher. So we've had that interregulatory meeting where they've all said yes, right? But remember, we lend 133 billion, so extraction, we're basically saying no more extracting from these guys. So we're finding a lot of pushback. So what I can confirm to you is we're working very hard. The second reason that we have a lot of regulation is NGOs. So, and when I say NGOs, I mean also multilaterals. So somebody sitting somewhere in the UK FCD office is looking at a World Bank report and then sees, oh, Kenya is having a consumer protection issue. So then they'll start as a project there, get funded by the UK government, then get cascaded down into one of the UK funded NGOs or agencies, and start a process for legislating or for policy making.
I just wanted to add a voice on KYC. I read somewhere that if you do proper identity verification, like you can be able to stop even NPL at the point of onboarding your customers. So we should not neglect it might be expensive, but do thorough checks, especially for KYC verifications. Number two, because I know we are dealing with most of the digital lenders here, DCPs, there's one key element that I have seen very effective, especially for swap kind of cases. We have rolled out an API for swap checks. So you can actually, you disburse that loan, just do a quick check whether a SIM swap has been done, this particular number, in the last 72 hours. If it has been done in the last 72 hours, pause. Don't disburse unless probably the customer verifies. But if it's more than 72 hours, then you can go ahead and actually disburse the loan. Because I realize what fraudsters do is that once they have access to your phone, they go ahead and go to the app that are in your phone, they go to USSD, and they actually borrow all the apps that they can see there. But if SIM swap can be done, just that can really and we have that technology today. So ability to compare the profile picture of this applicant vis-a-vis what is in the ID. There is a phone number verification. And I saw this also in one of the clients recently. The grandson is having the same name as the grandfather. I think those who come from Central Kenya. Yeah, so if it is Kamau Mungai, the grandson will exactly be Kamau Mungai because the father is Mungai Kamau. Yeah, apparently that was the case. So this guy used his grandfather's ID, all the details. The only thing that was different was the phone number. Yeah. So the good thing is that he was doing his phone number verification. And when you do that, you realize that the ID number is not the same as the ID number for the grandfather that had been provided. And that's how they were able to capture that is somebody who is trying to steal somebody else's identity and to go ahead and borrow. And then for the statements that we check on our side, we have document verifications. So things like who is the producer of the document, what technology was used, are there any timestamps, and then data level content like the dates, the timestamps, and all that. So there are tools out here that can be able to help you to fight that fraud that you talked about. Yes.
Thank you so much. You guys are coming on my podcast soon. I can promise you that. There's too much knowledge here to use. So as we bring this to a close, I'd like to ask one last question in a minute or less each. I'd like your response. And the question is this. If a lender could only implement one change in the next 12 months to become more competitive and future ready, what could it be? And we could start with you, Victor.
What comes to my mind is go to Presta. They have a unified platform and you will not regret. When Dugan was doing the presentation here, I saw ILON, Easy Asset Management. They came to our office and they were asking us, we are looking for an LMS. And when I saw this presentation, I was very impressed. And what you guys have been able to do to them, don't operate in a silo, get a unified platform where all these things, from fraud checks to onboarding to credit scoring, because when you go to them, you will have used our solution at Spin Mobile. Thank you.
Thank you.
I'd echo the same thing, intelligent automation, but driven by data.
if you don't digitize, your business is not going to be sustainable. It's as simple as that. Real-time visibility for top management is critical in this area.
What more do you add? I think use AI. I think figure out how to integrate some of these AI solutions to your existing solutions. I actually have connected, there's a little product I'm testing that I've connected to Zoho, sort of lending product, so I would have connected it also to Presta. And it's very cool how easy it is to build something start to finish using AI and connect it to payment rails and then connect it to an accounting system. And I think the future, that there's something there. So if you're not already using AI in your processes, I'd urge you to at least try.
Okay, I'll go a little bit technical. I'll say you're using fragmented systems, you're using Presta, you're using AI. The one trick no one really talks about when they're dealing with AI is anomaly detection. So always look at, there's always two layers. As your AI is running, you still have to do periodic checks to ensure it's not going off on a tangent. And the secret to majority of these frameworks is anomaly detection. So simply put, whatever you're using to, say, score your guys, always have a tight anomaly detection unit. So for example, even from alternative data, a small anomaly could easily identify a risk. Most people look at AI as a solution in itself, but if you focus on having tight anomaly detection, you can easily allow the humans, the leadership guys, to be able to start picking errors, to pick when the AI is going off the rails, to pick when your scoring guys are not as sharp as they used to be. And that critical factor can reduce your risk profile by up to around 45%.
There's a joke he gave us earlier, and I just want to say to the crowd, somebody asked Salome, he said, what is the one stage of lending we want to fix? He said, paying back.
So a big thank you to our panel. Please give them a hand. And I think just in closing, if I was to summarize it simply, I think there are three things I heard. One is the quality of your data, the insights that you get from data is so foundational. If you're not using data to know what's happening, nothing's happening. Number two, use technology, automation to make everything work well and better. And I think the last piece seems to be people. Yeah, people are so essential to the other two. So when you bring those three together, then you really have a digital lender that's able to perform at their best level possible. So thank you very much, everyone. I think that was on the panel, and I'll now hand over to Sally.